Good morning, traders. Welcome to another Flow Show. We write Wednesday, 3rd of September, 2025. And there's a lot to go over again. I'm going to try to keep the headlines and the comments as short as possible because we'll do a whole Flow Show only with what's been said again overnight, but let's try and keep it a bit short here. Before we dive into everything that's happened, just a reminder, and I think we are potentially in the last week or so for this discount, 40% off of your monthly subscriptions if you join. So there's no time to waste for those who would like to join our community. Um, just hurry up. There's also still the possibility to put down your name and your email address only once. You need to do it only once to be kept informed about our transition from Forex analytics into trading analytics. So once you're on that list, you will be informed about everything that will change and is going on. And I also think there is the potential to win a trader funding program and a free coaching session as well with one of our coaches if you are drawn out, your name is drawn out of the hat. That's it. Oh, also, but I don't have the link right here before ahead of me. Let me just do something here. There is the NFP competition has been launched. Let me just try and find that link for you so I can put it in the in our chat room. It is, don't forget, the main rule to be enlisted in the sweepstake. The main rule is to reply with your guesses on the, there we go, reply with your guesses on the original post there on X. So no other guesses will be taken into account. Don't put the guesses in our chat room or in our chat here. Only the guesses onto that original post will be taken into account. Okay, that is it for now. Let's move over to what has happened overnight. In China, the PBOC has upped the fixing just a tiny bit to just over 711. So what could have been understood as being a sign that they are going to let the yuan strengthen is still a bit fragile for now. We obviously keep an eye on it to know what they want to do with the Chinese yuan. Staying in China, so we had this big parade to celebrate the 80th anniversary of the end of the Second World War over there. China Xi invited Putin and his North Korean buddy Kim. So they were seen all together there. Also, Xi um, made a speech, pretty bellicose speech, saying that nobody should decide for them what to do. He wants to rejuvenate China. China is unstoppable. And also, what emanated from that, from the meetings that they had, is apparently China and Russia had signed some 20 cooperation deals, and Russia came up saying that they signed memorandum of construction for that Power of Siberia #2 gas line. The thing is, China has not confirmed this yet. There are no details in the memo either surrounding concerning the price, the time of construction, which vaguely has been said to be somewhere early 2030. So we still have a bit of time there, but of course it was a very, as Besson called it, performative meeting and day of festivities. if you watch geopolitics and stuff and you looked at that parade, was a bit alarming because there were a few new missiles, new weapons, etc., being shown off there by China's PLA. So and those new drones as well. Really a show of force, I would say, which obviously is important because it keeps the geopolitical scene very much at risk of anything bad or so, and the geopolitical the market watching the geopolitical risks are obviously keeping on their toes. Over to Okay, first of all, the US before I'm moving over to Europe. Trump was out yesterday trying to speed up that appeal on the tariffs regulation by that court that we had end of last week, trying to get it as soon as possible into the Supreme Court. Also, Besant was talking about it, wanting to speed up things. Hold on just one second. I need to do just a small trade. Bear with me. So Besant was also just hold on. Here we go. Yeah, Besant was also commenting on that, and then Besant, a nearly daily show, as I said already a few times. He was talking about the list of contenders to replace Powell, and he is planning to present a short list. There are about 11 names on the list that we know. He's planning to present a short list to Trump this Friday. He said that after Labor Day he wanted to speed up the decision making for Powell's replacement. So he presented that he's going to present a short list, which is probably going to eliminate a few names of the 11 contenders that we know of right now. For people who want to see that list of the 11 contenders, I've placed it in our newsroom a little bit earlier today. We also had obviously the usual housing issues with Cook, back and forth ping pong, Pulte saying that they have video proof now that Cook declared her primary residence is being rented out to tenants right now. Cook's advocates fighting back, saying that she hasn't done anything wrong, but it is clear that there's going to be a big fight to get her out and Myron in her place before the next Fed meeting, obviously. Um, and then I think we can. Oh, Japan. Okay, in Japan, as I've said yesterday, there's more and more LDP leaders throwing in the towel. Ishiba actually um, asked Moriyama to stay in place until at least next week. Next week, the 8th of September, there will be an LDP meeting to decide whether they want a leadership change or not. That has implications, obviously, because if they ask for a change, that would mean Ishiba has to leave, and sorry, they will have to call for elections, obviously. Um, we have seen on the back of it the longer end JGB yields as well ticking up. We know that a lot is going on these days in the bond market. We've seen it again this morning in the UK bond market as well, but also the Japanese JGB market is also on its toes right now. That has, in the immediate, obviously, there's a lot more going on, but in the immediate, it has to do with those Ishiba problems that he's facing now, losing so many members. So put it in the diary next week, 8th of September, which is the same day as Mr. Bayrou in France will have his vote of confidence. there will be that meeting ongoing. Ueda met with Ishiba today. They discussed, as they usually do, a lot of stuff. They discussed the economy, they discussed the market in general, but they also included FX. Usually, there is not too much discussion surrounding FX as such in those meetings. But today they found it necessary to talk about FX. The Ueda also repeated that if everything goes according to plan, they will um, continue to raise rates. Obviously, nothing has changed there, but he's never ready to stick a date on things. So we are still guessing about that. Akazawa, in the meantime, the main Japanese trade negotiator, is going to the US finally from tomorrow until the 6th and to try to put stuff to paper, finally, trying to put stuff to paper on that US Japan deal, which is obviously also for Ishiba very important. If they would get finally everything to paper, it may just save Ishiba's back. Okay. And then over to the EU and Europe. Yes. So speaking about Beirut just earlier, there's been a lot of talks going on, obviously, by French officials about that budget upcoming. Villeroy, ECB's Villeroy, he urged now France to reduce the deficit. Also, the finance minister Lombard was out saying that the French politicians should gather together to try and get something done about that budget. There's also been talks about a potential target of 3% by 2029, but in the meantime, they are going to try to get it below 5% on current budget, but nothing is really done there because Bayrou doesn't find too much support yet for everything, and he is meeting today with the Socialist Party to try and get some sort of agreement from them over the taxation of wealth and expect a lot of protest coming in France, people taking to the street again because he wants, of course, to abolish two public holidays, and that's going to be a big sticking point, obviously, with all the unions. So prepare for people taking to the streets if that ever gets voted through. So his vote of confidence is also going to take place on the 8th of September. We had a couple of ECB speakers out as well. By the way, Lagarde spoke today, but it was all about stable coins and regulations. Nothing much to take from there. But we had ECB Muller on the wires yesterday, and also acting central bank governor of Slovenia, Dolink, and basically both saying the same thing. On hold, but the future will tell us what to do. And Solink actually a bit repeating what Schnabel was saying yesterday, saying that there's no change to no reason to change the rates now, but he says the next move could be a cut or could be a hike. So, of course, sitting on the fence, but not completely abandoning the idea that if, for any reason, inflation would roar its ugly head due to those tariffs, where most of the central bankers agree that it is a one-off spread out shock to inflation, they're still not ruling out that they may be forced somewhere down the road to hike. And personally, I don't think that that's going to happen anytime soon. Over to Germany quickly before I go into UK then. Yeah, German foreign minister was on the line, was on the wires just a few minutes ago, saying that he hopes for a EU-India trade deal concluded by fall. We know what's going on between India, Russia, China, etc. So a EU deal with India, where the US is really trying to put pressure on India would perhaps not be seen as very positive by our friend Mr. Trump, of course. And then over to the UK situation. It has been confirmed that the UK budget now, the autumn budget, will be presented on November the 26th. The budget office always needs a number of weeks to compile the whole thing, so Reeves has like another 2 months, more than 2 months really, to come up with the goods. In the meantime, there has been big calls by UK businesses to where is it? Where did I have this line? UK businesses and bond investors to cut spending in the budget instead of just hiking taxes. But it's a normal lobbying, of course. In the meantime, we have seen that as we saw the move in the bond market this morning again in the UK, the sterling still hasn't found too many friends. But it's a UK thing. But I will talk about sterling moves, but it does because it does seem that. Probably also due to the dollar side of things, but maybe just maybe the FX market is calming down a bit. And with that, am I through all the lines? I think I'll keep it to that for now. Just know that this afternoon, sticking with the UK, and that is going to be important, we will have this UK Treasury Committee meeting, which the Bank of England members always present after an MPC meeting. It's a quarterly Treasury Committee hearing, so we will hear from I think it's Bailey for sure, and then Green and Taylor, if I'm not mistaken, who will be there. And in the context of what's happening in the UK bond market, of course, it will be worth listening to what those BOE members will say. It could become a bit messy, as we have the habit with when Bailey is talking, but it may drive the bond market, especially if they're going to be grilled, as James rightfully said in our room this morning, about potentially ending QT also, because that is also putting stress in the bond markets right now. So there's going to be a bit of grilling there, in my opinion, this afternoon. So this is one to keep an eye on if you're having positions in the sterling. Okay. What else has been going on the data? Well, quite a few data coming out. Not the most important ones. We have seen yesterday in the US that ISM manufacturing list coming out, a lot coming out. The headline came out just a little bit higher than the past one, but also still below the 50 mark. New orders was pretty good in August. Prices remain obviously sticky, but again, since we are in employment week, we need to keep an eye on this employment index, which remains relatively low, well below the 50 expansion or contraction line. Okay. The S&P manufacturing PMI in turn came out much better than past month, and also there in the employment component, there was nothing really alarming to see there. It's actually was above the 50 line there, so there was quite a bit of discrepancy between the ISM and the S&P manufacturing PMIs. But obviously, we know that the main indicator will come still, and I think we have that tomorrow with the ISM services PMI when we talk about PMIs specifically. Okay. Then we had Aussie data. First of all, the composite PMI came out a very nice 55.5. The services also well above the 50 line and better than last month, better than expected as well at 55.8. And we held also again, Q2 still, okay? And we had also pretty decent revisions. Well, it's just 0.1% higher, but let's say green. It was green. The year-on-year was pretty okay at 1.8. The quarter-on-quarter 0.6, less impressive, but it just keeps the Australian picture globally, the Australian picture, maybe that positive. Okay, that's what I would say on about the Aussie, because just thinking back at the whole tariff story, let's not forget that Australia has been kind of spared on the tariff front as well, because they are uh, relative to others paying less tariffs, meaning that they pay 10%, where the others are more in the 15 or more percent bracket. Okay, we had Sweden getting back above the 50 line. If you look at what the Stocky has been doing of late, it's not too bad, but of course it's a relatively smaller currency. It is still somewhere your accelerated euro, I would say. And then we got the European PMIs, okay, services PMIs. Just note the French, German, EU were final readings, okay, but we had the Spanish PMI out a little bit less ecstatic than the prior one, but still comfortably, I would say, above the 50 line. All right. We had the Italian out also above the 50 line, but also slightly weaker than the prior reading. Nothing much to see there. The French a little bit better than past month, confirming the flash readings. Here on the no, actually a little, just a tick, but call it the same as the flash readings. Better, but still below the 59. And then the Germans were a little bit of a disappointment there again, even though the report said there wasn't anything dramatic going on. There was a slowing of hiring, which was really responsible for a bit of a setback here on that services PMI. It's rather on the hiring side of things that they were not overly satisfied, but overly the report wasn't that dramatic either. Okay, and then we had the European ones obviously impacted by a bit of a slower one on in Italy, Spain, and then the German one coming in just a tad below the flash number, but not a lot to see there really right now. And then we had a bit of a surprise here on the UK ones, which came out quite a bit better than the expectations. A whopping 54.2 on the services. That is 2.5 points higher than what we saw last month. So from that side, there is not a lot wrong with what is happening in the UK. And as a matter of fact, we had a bit of a jump back in all things sterling on the back of that number. We are stabilizing a bit now, and I would say if you measure strength and weakness of the sterling, I'd still advise you to have a look at the euro sterling for really knowing strength or weaknesses, because the cable is jumping around, but there's obviously also the dollar factor in there. We have a bit of mortgage data, weekly mortgage data out later today. As I told you already, that BOE Treasury Committee hearing, which will be scrutinized especially by the UK gilt markets. Then we have the durable goods, but they should be swamped into all else that is happening. And then we have the first real indication of how the job market is evolving in the States. It could be that this number is actually showing a bit of a distortion, perhaps based on what's happening on migration, etc. But we will see if there are more openings or less. Just pay attention as well to the components of it on the quits rate, etc., because they give an indication also about the health of the jobs market, not only the main number. But this is going to be the first in a lot of job reports out of the US, which will be absolutely the drivers, besides all the geopolitics, etc., but which will be an absolute driver of everything that's going to go on for the dollar into the second half of this week. Okay, I mean, the market is waiting for what the job market is going to tell us after um, Powell's FOMC, last FOMC, and obviously his Jackson Hole speech. All eyes will be on everything that's going on in the jobs. So those will be each of them movers going forward. We do have a beige book out as well. Gives a bit of a health of the corporates and the consumer as well in there, but and activity in the different areas. Those are reported by the different Federal Reserve banks, the regional ones, and how the regions are faring. Those used to be a very this used to be a very, very, very big indicator. For some reason, the market nowadays is not really reacting much to it, but I wouldn't completely dismiss it, okay? Especially, I would say, if it comes in line with what has already been going on in the market before. It could be a bit of a kind of a confirmation, a bit of a kicker, if you see what I mean, for all things that are going on. If you see something really specific popping out of that beige book, although it's not, as I said, it's not anymore your most important data point, okay? Um, yeah, Steve, I know what you mean about the whether the market is going to believe the numbers. But the thing is as well is that we have to know that with the market now being so much based, if you look at the asset managers and a lot of investors now, they are basing their volumes and their trades, they are basing them on numbers, right? And those numbers, they get crunched into models, and the models come out with something that they need to adjust portfolios, etc. So in a way, whether the numbers are false or true, look at the Chinese numbers, for instance, that are pretty much unreliable, but still you need to take into account the face value of numbers, because that is just what creates flows, even though if those numbers could be massaged. What else is happening before tomorrow's next flow show? We will have the Aussie trade balance, important, sort of, but I'm not even sure which month this is. Let me just try and find another calendar. No, it's not even on there. We know that the trade balances are going to be important going forward with all these tariffs, etc. Look also between exports and imports, whether the activity is going up or slowing down, because that also has a bit of an impact on what we think about markets. Okay, then we will have Swiss CPI coming out. Swissy for the time being, if you look at Euro Swiss, not moving too much. We also have this Swedish preliminary August CPI out, and then a bit of those construction PMIs. Movers, yes or no? I wouldn't put them on top of the list, although there are numbers, perhaps specifically in the UK or so, where they could be a bit of an algo mover. Okay, and then we will have the July European retail sales out before we then move, but we will talk about those tomorrow. On to the next slew of US jobs data. That's it for the calendar. Let's see what's happening in markets. Let's start with sterling first, okay, shall we? Because obviously there's been pretty decent moves going on. This morning we had a bit of a blowout, or a bit of another round of gilt selling, and the 30-year, I think, touched somewhere around 575, if I'm correct, which sent again shivers through the market, and we saw another sharp drop there in the cable to open the debates around 11 o'clock, 11 8 a.m. The opening of the markets in the UK. But again, and I would now just want to draw your attention here. You know that I attach quite a bit of importance to this 133.65.75, okay? And I was also talking about the dollar side of things, right? And now we have seen like 1, 2, 3 serious attempts to get to and to stay, but at least to get below that 133.65. But we have seen buyers. I reckon they are somewhere take profit buyers in the currency. The currency is obviously directed by what's happening in the gilt market right now, because they really walk hand in hand. But also independently of that, I'm seeing that those moves are now getting bought, whether it's a bit of take profit, but I also think it is has to do with the dollar side of things, because going into the second half of the week, where we see a lot of employment reports coming out of the US, which are going to be mega important, I don't think that the market wants to run too long dollars getting into those reports. What happens once those reports come out, we don't know, okay? And if it comes out strong for the dollar, yeah, this thing is probably going to break here, and we're going to have a look in the 132s. And why not, if the reports are really defying the laws of gravity again in the States, why not going to have a look at the longer term or the more medium term bottom here down here? But in the meantime, and I think that's important enough for the intraday, we have to note that those dips below have been met with some buying, okay? So that makes this level still for me important enough to know where we are in terms of cable, whether we close the day below. So far we haven't had it, or not, all right? So the level is still valid for me. And yes, Brand, this could still hint to the global market actually to be in ranges going into those job reports. Now, the bounces yesterday and this morning have been limited to around 134.15.20. That's your first little level here to keep an eye on. On the jolts, it can move. It can move quite a bit. Also, as we speak, keep an eye on that long end yield in the sterling, because it is coming back a little bit. So a bit less stress in the bond market could also mean that the sterling is finding a little bit better support, okay? If we get through here, the mid 134s is going to be your next level to watch, and then I'm say like 50-60, 134, 50-60 is going to be the next levels to watch here. But again, when we talk about ranges, we are going to need for cable to get really bid again, even though we could have like a bit of a violent short covering swings perhaps, because I reckon the market has been selling quite a few sterling over the past couple of sessions. We are going to need to overcome those 135s, right? 135.20 start there, 135.40 pretty important, and really 135.90.95 is going to be really the gateway to go higher, 136.5, and potentially back up higher. But for as long as that does not happen, we are going to need to respect exactly those ranges, okay? Inside the range, it can move around a little bit. I would say that in the current context that we have now, uncertainty surrounding fiscality, etc., sterling is likely going to find sellers on rallies. But is it not better to do it in a euro sterling than, for instance, in cable as such, because of uh, the potential, the possibility to eliminate the dollar side of things, okay? So in the euro sterling, we saw a bit of a dip lower yesterday. We also saw a bit of a dip lower on the back of that better PMI coming out today. But so far we are holding that 86.85. I would say your more important level to watch is again going to be 86.70. Okay, if you get down to 86.70, I would expect in current context to find buyers, potentially those who have missed something, some of the moves, they may already show up, but especially if we get down to 86.70, I think that's going to be a relatively important level if we're seeing that, because that could form a base and then start to push higher again. Okay. In the meantime, still we are holding below of the latest setback, not the bigger one, but the latest setback. We are holding the 78.6, interesting level on the day. If that goes through, though, I think then we are going to tag 87.5, and as we have seen already, and other people already commented on that, 87.5 could be your gateway for much higher levels if you look at the longer term. All right. If you see here, 87.5 at 87.70. If you get through here, yeah, we are probably going to go back much higher. But in the meantime, we also always have to respect those intraday levels. Yeah. Euro dollar, interesting, and confirming the range. All right. I'm just going to repeat it until the range breaks, because it's really, it has been tradable. Okay, 0510, it was a decent support. This morning again on the opening, bit after the opening, all of a sudden the bond markets we're getting a bit wonky. By the way, where is that? Hasn't moved too much, the French Italian spread, but again 116 or 510, and it's holding, and we are back towards the middle end of the range. Okay, don't fight that range until that stuff breaks. All right, and this is going to be valid going forward in with all those US job reports as well. I mean, no use to fight the range, because for as long as it's there, we can't really fight it, right? So the levels are really remaining unchanged. Yesterday's high around 116.80 is worth watching a look, and then 117 from 117.05.15. That trend line is probably going to go into the bin sooner rather than later. Really, it's going to be 117.40.50, which is going to be the key for breaking that latest range. Okay. Um, if that breaks, are we going to 120? Maybe, but there's still going to be a bit levels ahead of it. But again, trade the ranges, right? Same on the dollar yen. This morning it was looking as if we were going to break significantly, actually, because it was going quite rapidly. But it was again a dollar move, a global dollar move. The dollar shot up, as I said earlier. Today we broke above 140.49. We went a little bit above the trend line as well, but similar to every other dollar, it came back. Ranges, all right, ranges. Yes, we had this big spike here back in early August, but basically those little spikes here back in July, they really are representative of what happened again today. There again, range, but again with the same um, comment, or I should say with the same observation, is that if you look at the yen crosses, they still remain bid, okay, and finding buyers on dips. So that makes me think that if we see any dollar weakness, there would be a potential for dollar yen to stop earlier than other dollars, and especially when we see mild dollar weakness, that means a softening of job market numbers instead of a falling out of bed. Okay, if you get a softening of the US job data, I think this dollar yen would may stop or get down slower than other dollars. I think stuff like the euro dollar or Aussie dollar, for instance, are maybe a better play to be really short dollars, because if you get mild numbers, and let's not forget that Aussie is also, besides a commodity currency, is also somewhere a risk currency. And then I'm also thinking about stuff like the Norwegian kroner, for instance. But those things can do better. Now, Yesterday, yes, we had a bit of a peak below the 64.95 figure, but it stopped relatively soon in those little spikes here as well. And again, like all the other dollars, we had those that big move lower, but then we started to respect those little spikes again. Yesterday we did the same, and we came back above 65 the figure. We had those numbers in the Australia doing slightly better. I still think that the Aussie dollar could be one of those doing relatively well on a mild weakening of the dollar. Obviously, we're also still in that range that we have started to build, and we also still need to overcome that 65, call it 50, 60, 65 here, okay, to confirm that we can move higher again, okay? So we are still needing confirmations, but there are a few currencies which could be better than others, okay? I think if the dollar shoots, then I think you're going to have to look at stuff like dollar yen could actually break 149 and move back up into the 150s, and the relativity of the sterling may also mean that if the dollar rises sharply, cable may be a more decent short. Okay. Um, Really, I'm not going to look at the Swiss today, but gold, obviously, fresh highs. We've been talking about it so often. Again, yesterday the US was buying it. Asia overnight bought it, but rather supported it rather than really buying it in the same fashion that they did the other sessions. So yes, it is still uber positive. This thing, there's no two ways about it. Whatever is happening now, potential of lower yields, in the US, potential of geopolitics problems, politics, left, right, and center, that we see. Also, the Ukraine-Russia situation is just not going anywhere right now. And jittery bond markets are de facto weighing on confidence. And we have seen, and now everybody is talking about rebalancing of portfolios, increasing the holdings of metals in general. So, but gold is really one of the leaders. Now, this being said, I have taken. You guys know that I was long from here somewhere. Um, been adding and taking off stuff in the meantime. For the day, I think we may just see a bit of consolidation, I'm going to call it. And where this consolidation can lead us to, I really don't know, because it's a pretty volatile instrument. Yes, we are next, because there's much more lying above, of course, if all the conditions remain same as they are right now. But yes, next we are looking at 3600. But will it just happen now ahead of those numbers? Maybe the jolts will again show us the way higher. But I don't want to completely dismiss this 35.44. And for the time being, I've just flattened up my positions in gold. It's been a really decent ride. For the time being, I just want to be a bit cautious because, as I said on my morning updates in the room, I am not going to rule out, and we can't rule out, a little bit of profit taking going into such an important couple of days of jobs data coming in, right? So I wouldn't just rule out a bit of correction, a bit of profit taking, which could take us back down to 3,500, for instance, or 34.85. It's going to be an ask to me, unless there's all of a sudden a big wave of profit taking. We get a much better than expected jolts today. Market spooked a little bit, and bringing it down to mid 34s or even below. That's but it's going to be a bit of an ask right now to see such kind of correction. But let's not forget that we have seen these kind of corrections in the past as well. But anyway, I just first day here that I really am a little cautious and let's say just prefer to bank the stuff and see what's going to happen afterwards. We are traders; we can always re-enter the trades whenever we like. Silver, no exception to other metals, very, very, very bid, and we are closing in on that 41 50 60, which is a bit of my next target. Okay, if it goes above, then we are talking about 44 45 probably. But in the meantime, yes. And also just put this one on this morning, this little correction here, that 41.58, and it's actually coming in right at the same level, is the 161 extension of the last setback that we saw. So got a little bit of double fib action going on there in silver in the next what is it, 70 80 cents from here. Okay, so that may be somewhere where the market also takes a breather. For the time being, nothing's changed for as long as we're above 39 and a half, let alone 35, but even above 39 and a half, we are bid and very bullish on silver. Can we see a setback? Of course we can. We have seen many in the past, but it still remains extremely big, all in all. And that is it for me for the day. Just a last little look on the S&P, because it is probably going to be all these jobs data, etc., are going to be having an impact on everything, equity markets, etc., etc. I still would like to draw your attention to this trend line, which is coming in around 64. We had a bit of a look through on weakness yesterday, but we are back above it. 64 is your first level to watch. Okay, and of course below there, 63 and a half, 62 will be extremely big. But again, look at where we end at the end of where we are at the end of the day, whether we are above or below to close the day on the S&P. I think it's already important enough. 6400, 63, 40, 50, call it. Okay, those are levels that we need to pay attention to. For as long as they don't break and we stay below, this thing is still very much going up, in my opinion. And with that, ladies and gentlemen, I'm going to thank you for today's show, and we speak to each other tomorrow. I think Ryan will be back tomorrow. Thank you for being with me. Adios.